Hey everyone, today we're taking a close look at Meta, and in this video you will get two key things: a quick, clear fundamental breakdown and a short technical outlook using Elliott waves. At the end, I will tell you exactly what levels I am watching, including two major correction clusters and what to do if Meta drops into them. Let's dive in. Let's start with the fundamentals. Meta's revenue continues to grow at a steady pace, around 15 to 20% per year. EPS also showed extremely strong growth in the last 2 years, jumping 60-70% annually, which is very impressive, but that momentum has clearly slowed down. Looking quarter by quarter this year, revenue is still growing modestly, around 5% each quarter, which is decent. But EPS is now declining. In the most recent quarter, EPS was down by 15%, and for the full year, Meta is heading toward zero or even negative EPS growth. That means the explosive 60-70% growth is gone for now. That's a problem when valuation is rising. Last year, Meta had a forward PE of 7, extremely attractive. Earlier this year, it was 12, still very reasonable. But today, the forward PE is in around 19, while EPS is flat or negative. That's a red flag from an investment perspective. Meta continues to run buybacks, which supports the share price. But even with buybacks, EPS is falling. If buybacks slow down, that pressure gets worse. Free cash flow is also starting to decline from its highs. Not dramatically, but enough to warrant attention. Less free cash flow means weaker buybacks potential. And when we look at the chart, the price began falling as EPS turned down, showing that fundamentals and price are finally aligning again. So fundamentally, Meta is no longer in high growth phase. We are likely somewhere in the late cycle zone, where big players begin distributing. Switching to the technicals. Meta is trading near the upper boundary of a very large long-term channel. Price has moved from above the 200-day moving average, and whenever that happens, the market often needs a correction to rebalance. We are likely in the final fifth wave, the euphoria stage. And during euphoria, price can do basically anything. 700, 900, even 1200 is possible, because distribution phase can stretch far longer than expected. But remember, after a fifth wave top, corrections in Meta historically reach 60 to 80%. Even from high levels, that would be brutal. So at current prices, entering without protection is extremely risky. If you are holding long, this is time to consider insurance, long-dated puts, for example. Now the most important part, the levels. Cluster 1, $275, $340. Cluster 2, $150 to $100. If Meta breaks below the first cluster, then the structure points toward a deep correction, and the price may fall all the way into $150 to $100. This would align with the large fourth wave retracement. What to do? If you are already in the position, consider hedging. Puts are still relatively cheap and protection makes sense at these levels. If you are waiting to enter, don't chase at the highs. Start considering positions only at the $275, $340 zone. If that level falls, the next area opportunity is $150 to $100.